Good evening, everyone. This is Jason Ellis, and this is your Unit 1 Decision Making Direct Instruction. I did just want to go over a couple problems from the book, just to make sure that everyone's prepared for the assignments that are be coming over the next few weeks. In addition to that, I would suggest for you guys to each watch the overview of financial management video. And with that, between this, the direct instruction tonight, I'll also do a couple more videos next week as well. You should be in good shape for your submissions this week, next week, and also week 3. The learning objectives for tonight, by the end of this session, a learner should be able to explain the basic features of the balance sheet, understand the difference between EBIT and EBITDA, and also calculate cash flows using information on standard statements of companies. Also, we do want to make sure that each person is actually reviewing these direct instructions. So I do like to add that what I want you guys to do is pretty much go to my Unit 1 discussion post. You'll find my discussion post at the bottom of the list there. Watch the short video that's titled Finding the Right Business Structure. And then reply to my post with a brief comment on the video. Doesn't have to be anything, very fancy. I do just want to see a response there. So that way I know that you actually did view this direct instruction video tonight. Alrighty. So as you see here on the right, you'll see a sample balance sheet. This is actually taken right from your book from Home Depot. One key thing to remember about a balance sheet is that ironically that both sides have to balance. On one side, you have the assets, which represent what a firm owns and or benefits from. So whatever cash they hold, inventory, even the land or buildings are all included in the asset section of a company's balance sheet. On the other side, you have the liabilities. That can be both short or long-term debt commitments that the company has taken over a period of time. You'll have total equity on this section of the balance sheet, which is just the value of all of the shares of the company. As you may know, the value of the company shares can vary, a lot from day to day. So just remember that these balance sheets represent a very specific moment in time. All right, now moving on to income statements. Once again, right from your book, you'll see a sample income statement from Home Depot. Two things to note here regarding EBIT and EBITDA is that the use or focus to either will depend on the type of company or industry, as well as what you're actually looking to figure out or compare. EBITDA is more popular among highly leveraged companies and capital intensive firms that have a lot of depreciation calculations, such as utilities or telecommunication companies. Companies with more of a service focus, would more likely use EBIT, mainly due to the relative similarity between the two figures, since they have little in terms of non-cash items. When comparing companies' income or profitability, it is often better to utilize EBITDA because it removes the impacts of accounting and the financial decisions of the company. So we'll work a little bit more with cash flow statements next week. but I did just want to touch on it a little bit here. Although the income statements report the flow of money, the cash flow statement is actually a more straightforward report of the inflow and outflow of cash, which makes them more useful when determining the future needs of a firm, or when a firm is facing financial troubles and needs to closely manage their inflows and outflows of cash. So ultimately, we'll cover a little bit more on cash flows next week. But I did just want to kind of touch on that a little bit today. So that brings us to our first problem that we're going to go over tonight for Big Co's balance sheet. I'm going to pause for a second and give you guys about a minute or two to read through this question and also answer it. And then I'll come back and then we will go through the problem together. All righty. So first things first, you want to start with what we already know about Big Co. We do know that 1 year ago, the retained earnings was $450 million. In addition to that, we know that the net income for this year was $35 million. We know that they paid out a preferred dividend of $5 million, which left $30 million available to common shareholders. We know a regular dividend was paid out to the common shareholders of $6 million. And we also know that a special dividend was also paid out of $10 million. This is all taken directly from the problem, which leaves a change in the retained earnings of $14 million. Basically, we just add that to the beginning retained earnings of 450 plus 14 million, leaves us with an ending retained earnings of $464 million. All right, now on to a balance sheet problem with Jesters R Us. Once again, I'm going to give you a minute or so to go work through that problem, and then I'll go through it with you together. Alrighty, so now we're just going to start with what we, once again, with what we know. We do know the market values in this problem. We do know that we have 4 million common shares. We also know that the price per share is 21, which means that our equity value is 84. And that's in millions. I apologize. Next, we're going to calculate the book value, which is basically our assets minus our liabilities, which brings us the equity value. So ultimately, all we do is divide those two, and that gives us our market to book value ratio, which is 1.68 million. Or actually, that's billion. I apologize. All right, now we're going to go into a problem with EBITDA. Once again, I'm going to leave you, I'm going to be quiet for a couple minutes and let you guys work through that and come back and solve the problem with you. All right, we're going to go ahead and solve this problem for number one, retail. So first things first, we want to make sure we know, our formulas. We know that EBITDA is equal to EBIT plus depreciation and amortization. EBIT is equal to the operating profit, which equals to the gross profit minus operating expenses. So for this particular problem, we know that the gross profit was $55 million. We also know that the operating expenses were $22 million, which leaves us with an EBIT figure of $33 million. We also know that our depreciation and amortization figure in this problem was $6 million. So we add that 33 and the 6, and we get an EBITDA figure of 39. All right, and this is actually going to be our last problem for the night, which is for small co. So once again, I'm going to be quiet for a couple minutes, and I'll be back to solve the problem shortly. All right. So for small co, once again, we want to start with what we know. Um, and it's basically, we do know the formulas we're going to need to solve a problem such as this. Um, we know that the cash from operating expenses, from operating minus the cash from investing, minus the cash from financing equals a change in cash. The ending cash is equal to the beginning cash plus the change in cash. Or in some situations, could possibly be minus. Alrighty. So the things that we do know from the problem, we do know that the cash from operating activities was $220 million. We also know that the cash from investing activities was $93 million. We know that the cash from financing activities was $107 million, which gives us a change in cash of $20 million. Next thing we also know that the beginning cash was $27 million. So we add those two numbers together and we get an ending cash value of $47 million. All right, so in summary, understanding balance sheets helps you to know what the firm owns and what the firm owes. Income statements tell you how much revenue was generated, what costs and expenses were incurred by the company, and how profitable the company was. At a particular time at least. Cash flow statements show the extent to which cash was generated from the operating activities, how much cash was invested, and how the cash was used to finance the activities of that particular firm. Here's a quick reference list. If you also like to learn a little bit more about EBIT and EBITDA, you can follow the link there to the finance storyteller. It's a YouTube video that I thought was pretty helpful with that. If you have any questions, you can feel free to reach out to me, call, text, email. Other than that, have a great night, and look forward to seeing what you guys submit later on this week.